Alright, thanks for tuning in, everyone. So, today we've had, since last night, Monday, we got the high of 68,473, and then we rejected off this level where we had a short, and we're just building up our levels to short, just averaging in a short position. We've come down, we ended up taking out a wick buy here at 66.79, and what the price has done overnight, basically since midnight, is we've come down and we're just trading within Monday's position. So from the low of yesterday of 65.8 to the high of 68,000, we're basically trading within that range so far. So the two setups that we had for yesterday, neither one have played out because we've kept it in this tight range, which is totally fine. And then we still have the two targets that we are to either come up and meet this liquidity level of daily liquidity grabs and the hourly wicks, which is around the 69,800 to the 70,200 mark. So if price is ever going to move up, it's definitely heading that way. So what we want to do is, as price will move down, we want to make sure that we come through and take these liquidity levels as buy positions, because that will average our buy price in without the fear of it going to zero. But we average our buy price in, which allows us to get a better return on investment as we move towards the liquidity high targets, the long targets of 69,800 to 70,000 and beyond. So what we want to do is we want to come in, grab a few levels as we can make 1% here, 1% there. We want to target that as we come down into these deeper levels. And also, as we go higher, we do remember that we've got this liquidity imbalance through here, just below this wick, where price mitigated on this side, blew through the top, and has consolidated here. So if we move out, we can just view from another angle. This has been a consolidation, an accumulation, in fact. And then we can see we're not sure whether this is going to be an accumulation or whether it's going to be a distribution. But all we can tell is that price is balancing itself. The market is finding equilibrium and deciding which way it wants to go for the next foreseeable future. That's why we've got these two biases. Are we going to come up and take this out first and come back? Or are we going to come down to grab liquidity and move up? So that's really what we're kind of considering. And what we're doing is we're just averaging in some prices. So here has been a short, there was a short, there was a short. And so if I set up here my long short liquidity levels, is my average short entry is here, and my target is the 65,150. So coming down and sitting just above these wick highs here, right in the middle of the imbalance, just above the 61.8 level. So I've got a few confluences that I'm targeting. I've got some old wick highs with imbalances, some old wick highs with liquidity wicks, retests. We've got an imbalance, and we've got a 61.8 level, which is from the retracement. As we rallied back up to the upside, we came up, we balanced around it, and we shot through. And now we're bouncing around the 78.6 mark of that rally, and now we're working out, are we going to go higher or are we going to go lower? And so should price go up, for instance, should price come to this level here, I will use that as an additional liquidity wick to buy in just another small portion, because it's all about small moves, small investments. I'm not all in at once, so I'll buy a little bit here, and then that will average my short price higher. And as my short price becomes higher, my target can also become higher, and then I could choose this wick now, but it makes sense for me that I want to target this area because I've got the imbalance, I've got some weak highs which need retesting, and I've got a 61.8 level. So that all sits in a confluence, which gives me a reason for price to be attracted to that direction. So, same with the longs. As price comes down here, I am going to look for longs at this level, just as I've got buy orders for here, buy orders for here, and a buy order here. So I've already got 3 buy orders in the market waiting for price to come down. I've got my targets in, so the market can do what it likes without me having to sit with my trigger fingers. I know that I can watch myself as price. I can let my targets and my average price sit in there. I haven't got stop losses because I'm not afraid that the market is going to plump to zero, nor is it about to blow off to over 100,000. And I'm also using smaller investments. That means that should it go to absolute zero, should the entire crypto market and Bitcoin absolutely plummet, I'm not going to lose my house. I'm not going to lose my investment account. It's just a small piece, and it all has to happen in the next 2 hours because I will be watching the market. Because when you have your phone on you, when you've got your laptop, you're always connected, and it doesn't hurt, especially when you're only focusing on one cryptocurrency. So for me, I'm focusing on Bitcoin, which means that I don't have to keep scrolling between multiple different charts. I don't have to jump between Ethereum, Solana. Because I'm on the shorter time frames and I'm trading in a smaller range, I can watch it and I can have both a long bias and a short bias and be able to trade those both in the same direction on the same chart. And that's the targets on what I'm setting. So, with that being said, my next buy orders will be at the 66,600, but I've also got the 65,806, the retest wick of 65,405, and then the final one, which is at the target of 65,120 so they're my long buys, my long limits. My short limits will be 68,250, 68,630, and then I've got one up here at the 69,850. So they're my 3 levels to the top, my 3 levels to short, my 3 levels to long, and I can be comfortable knowing that regardless of which way the market moves, I have averaged myself in for this within this tight range, knowing that the market will mitigate itself, and as my average moves higher, my target can come with it. My targets can come with me, and that way I can work in a smarter way. I don't have to be a genius. I just have to be able to stay in tune with the market, watch it, and be able to notice these liquidity areas, these liquidity wicks, where the price will come. So just as prices come here, moved up, come up, taken liquidity from here and here along this level, comes down, sweeps liquidity, all the stop longs under here, moves to a higher level, comes down, builds liquidity, moves up, sweeps liquidity from this level, And now we're going to look, are we going to move further down to take liquidity from this level, or are we going to take liquidity from this level? And I don't have to be a genius, I just have to be prepared to place my orders accordingly. Alright, that's it for today. Happy trading, and I will see you tomorrow. Ciao.